Well, gold reversed gains overnight, leaving the yellow metal sitting fairly close to 6-month lows. It seems there's a lack of buying interest ahead of the US Federal Reserve minutes out later this week. Larry Shover, Chief Investment Officer at SFG Alternatives, joins us now. Larry, great to see you there. Thanks for your time. Let's start with gold at the moment, because you've made the point before, ask 10 different people why gold is down and you'll get 10 different answers. What do you put this recent weakness down to?
Well, it's really many things, but the main thing is that gold has just lost its shininess, as it were, right now, because let's face it, there's less macro strife in the world right now, and that's a lot of the reason why people were buying it. We're in a period of tranquility right now. The economy around the world's healing, and so gold is just simply correcting itself to a price where it needs to be.
Okay, but what about its use as an inflation hedge?
Oh, absolutely. I mean, there's many reasons why gold has fallen from 1740 down to 1600 in the past 6 or 8 weeks. But some of it is due to the fact that there just isn't buying interest, physical demand from India, and they've raised their import tax from 2 to 4%, making it even harder. Another thing is we have central banks. They are buying, but they're not buying as much as they were before, and we just need a bigger buyer than just central banks. So. Also, inflation around the world seemed to be in check. So all the reasons why people should own gold, just not materializing right now. It does not mean you should sell it. It should be part of everybody's portfolio. It's just losing a little bit its luster right now.
Yeah, why is it not tracking the stock markets like it was for much of last year? It seems to have detached somewhat.
Yeah, that's a great question, Kate. And I think it's the good parallel to that would be like Apple stock. I mean, Apple stock was performing well when the stock market went down. It performed well no matter what happened. And sooner or later, momentum catches up to it. And really, when it comes to commodities trading, a lot of it is just momentum. I mean, why was gold going up so much? And that's because people were so afraid of central banks around the world putting their foot on the gas pedal. Even though they still are, people aren't as afraid as they were before, so therefore they're lightening their portfolio allocations to gold.
Okay, what about the technicals? Where are you seeing the support levels now?
Well, we crossed the death cross, as it were, at 1650. The next big support, we're sitting right on it at 1600. We're hoping to see some demand support uncovered at that point, especially from some of the central banks. But I will say that we need more than central bank buying to get gold back up to the new highs, something a lot more. We need a new impetus, and nobody seems to know what that will be.
Larry, do you think that might come from the sequestration story? Do you think there might be a bit more uncertainty around that as we run into the end of the month and into next month?
Oh, yeah, absolutely, Paul. I do believe so. I mean, right now it's just falling because there's no impetus right now in the market where people are worried. But yeah, I mean, I can think of several things that could go wrong between now and the sequestration in the United States to cause gold to spike back up to about $16.50 an ounce. But right now it seems nobody's worried about anything whatsoever.
Yeah, what about the Fed meeting later this week? Could we see a bit of movement around that, or do you expect to hear the same kind of lines and them to remain fairly, I guess, ambiguous?
Well, you know, I think, as boring as the meeting was, I think the minutes are going to be exactly the opposite. I'm expecting some type of dovish surprise to come out of the notes, because everybody in the U.S. anyway is dead set fixed on that 6.5, 2.5 number, and that's for the ZIRP pledge, not for quantitative easing per se. So I do believe when the Fed came out and said the outlook of the economy has to improve substantially, I think there's going to be some minutes underneath that will be uncovering a dovish surprise for the U.S.
Okay, and finally, what are you trading at the moment? What looks good to you?
Well, right now it's short term, but I do like the British pound, a very short term play. I think the dovishness is already priced into the British pound, so to go long that against the greenback right now makes a lot of sense. However, after the meeting, I think I would switch that position or get out of it. That'd be a short-term play. Other than that, I definitely would add to a gold position. There's too many people selling it, and really for no good reason.
Okay, gold and the pound. Larry Shover, thanks so much for your time. We appreciate it.
You're welcome.
Larry joining us live from Chicago there.